ladies and gentlemen, and welcome to this week's Video Insight. My name's David Buckland, and I'm being joined today by Dominic Rose. Dominic is the co-portfolio manager of the Montgomery Small Companies Fund. In this series of interviews, we continue off from 4 weeks ago, where I interviewed Dominic's business partner, Gary Rollo. And Gary Rollo talked about two telecommunications stocks, Macquarie Telecom and Megaport, which accounted for about 7% of the small companies portfolio. Just for some context, the Montgomery Small Companies Fund started at $1 in September 2019. And during the March 2020 pandemic lows, the unit price got below 70 cents. Since then, between then and the 30th of June, it's rallied all the way to $1.49. So in the 21 months it's been around, it's turned $1 into $1.49. Interestingly, over the same period, the benchmark, the Australian Small Ordinaries Index, has turned $1 into $1.22. So the Montgomery Small Companies Fund, in simple terms, has outperformed the benchmark by 27 percentage points on an after-expense basis. Today, ladies and gentlemen, Dominic's going to talk about two travel stocks. One is called Alliance Aviation Services, AQZ's the code, and the second one is called Corporate Travel Management, CTD is the code. Ladies and gentlemen, let me introduce you to Dominic Rose.
Thanks, Bucko. Delighted to be here and have a chat. Two very interesting companies, Alliance and Corporate Travel. Look, they're in that bucket, certainly, of businesses that have been significantly disrupted by the global pandemic. And we think with their advantage business models, using that disruption to their advantage, we think they are absolutely going to emerge from the global pandemic in much stronger competitive positions than when they entered. Firstly, with AQZ, look, don't let the name fool you. It is not an airline. It is a transport infrastructure company. They do own aircraft, but they lease those aircraft out to other businesses, and so they're not taking pricing or fuel risk. They absolutely own the infrastructure assets. Now, what we like about AQZ is they're led by a brilliant management team, Scott McMillan and Lee Schofield, arguably some of the best managers Gary and I have come across in our careers in small caps. And what we really like about this business particularly is their ability to generate significant returns. Now, they have a history of generating 30% returns on assets. You just don't see that in typical airlines. Now, why do they do that? Because they have cost advantages. They've got the lowest cost of capital in the sector, and they really do, they have a history of using these market disruptions to their advantage. Now, at the depths of the global pandemic, they went away and they bought a whole new fleet of aircraft at cents in the dollar. And now the story is they're deploying those aircraft and there is significant demand. So the business started off typically doing FIFO, fly in, fly out sort of services in the resources sector. But more recently, it's really broadened out and they're providing the aircraft to the domestic travel sector. And if you've been reading the press, you can see that the players like Qantas and Virgin, they have their own issues. They're looking to lower their costs. And so AQZ fits in quite nicely into that sector, being able to deliver narrow body aircraft that are basically going to fly routes and save costs for the big operators. So we think it's a business pregnant with lots of opportunity, lots of growth as they take this new fleet of aircraft and deploy it into a market which is calling, I think, for a lower cost to serve. So really well placed, great growth, great management. Corporate Travel Management, now that is a really interesting company too. It's a structural grower ahead of the pandemic. Pandemic arrives, significantly impacts the global travel sector. But emerging out of that, which we are now, we think corporate travel is in a really good, strong position to take significant market share from the incumbents who are big, large businesses which are less nimble. And corporate travel has a significant competitive advantage in its technology stack. So that provides a better outcome to clients, but also allows it to operate at a much lower cost. So we think their ability to operate at lower cost means that their advantage business model takes big share as we emerge from this pandemic. And interestingly, with corporate travel, 70% of their business is the US and the UK. Now, the US and the UK have done an incredible job vaccinating their population. They're now opening up. Domestic travel is, really rebounding quite strongly. And a key catalyst for that stock is going to be the opening up of the transatlantic route between the US and Europe, which, hopefully happens in a couple of months. Corporate travel will be really well placed.
Dominic, thanks very much for that rundown. And just for those that are interested, it's interesting to note that Alliance Aviation Services and corporate travel management on a combined basis account for just under 7% of the Montgomery small companies portfolio. Also, for those that should be aware, the Montgomery Small Companies Fund closed 30th of June at $1.49 or thereabouts and paid a distribution of just slightly under 8 cents per unit. And so on an ex-distribution basis, it came down from $1.49 to $1.41 or thereabouts. For those that are interested in investing in the Montgomery Small Companies Fund or adding to their investment, if you have any questions, please don't hesitate to contact my colleague Toby Roberts or myself, David Buckland, on 02 8046 5000. Thanks very much, everyone, and I hope you enjoyed this series on the Montgomery Small Companies Fund.